Building wealth is an incredible achievement, but the journey doesn't end once you accumulate money. Protecting your wealth is just as important, often even more so. Without a solid plan to safeguard your assets, unexpected events can quickly undo years, even decades of hard work. In this video, we will dive deep into how you can defend your financial future, covering everything from emergency funds and insurance to estate planning and fraud prevention. By the end, you will have a clear, actionable blueprint to build a fortress around your finances that stands strong no matter what life throws your way. Why wealth protection is essential. Picture this. After years of consistent saving and smart investing, your portfolio reaches a milestone and you finally feel secure. But then disaster strikes, a job loss, a serious medical emergency, a natural disaster, or even identity theft. Suddenly you are forced to tap into savings, or worse, sell investments at a loss. The dream of financial freedom slips away faster than you imagine. This is not just hypothetical. Studies show that over 60% of Americans say that an unexpected expense significantly set back their finances. Medical bills alone contribute to nearly 40% of personal bankruptcies in the U.S. This means that despite hard work, many face setbacks that could be avoided with proper planning. Wealth protection isn't about fear, it's about peace of mind. It's about creating a financial safety net that keeps your goals intact through life's uncertainties. Understanding the biggest risks to your wealth. To protect your wealth effectively, you must first understand what threats you face. Here are the most common risks and how they can impact your financial security. Market volatility and economic downturns. Investments fluctuate, and market downturns can be sharp and severe. Remember the 2008 financial crisis? The S&P 500 lost nearly 40% of its value in less than a year. Many investors panicked and sold at the bottom, locking in losses and prolonging recovery. Even more recently, events like the 2020 pandemic triggered massive sell-offs and uncertainty. While markets historically recover over time, the short-term volatility can be nerve-wracking and financially damaging if you're forced to liquidate assets during a dip. To protect yourself, it's crucial to maintain a diversified portfolio to spread risk. Keep a cash emergency fund to avoid selling investments prematurely. Align your investment strategy with your time horizon and risk tolerance. Avoid emotional reactions to market swings. Inflation, the silent erosion of wealth. Inflation quietly reduces your money's purchasing power over time. Even with a modest 2 to 3% annual inflation rate, the real value of cash decreases substantially. For example, $10,000 today will only have the purchasing power of roughly $7,000 20 years from now, if inflation averages 2.5%. If your emergency fund or savings sit in low-interest accounts, inflation chips away at their value, eroding your wealth's real worth. To combat inflation, invest in assets historically proven to outpace inflation, such as stocks, real estate, and treasury inflation-protected securities. Tips. Regularly review your portfolio to ensure it remains inflation-resistant. Avoid keeping large sums in cash unless for immediate needs. Unexpected expenses. Medical emergencies, job loss, and more life is unpredictable. A sudden medical emergency, major car repair, or job loss can cause severe financial strain. Without a proper safety net, you might have to borrow at high interest rates, rack up credit card debt, or sell investments during market lows. These events often happen when you least expect them, so preparation is essential. Building an emergency fund and maintaining adequate insurance coverage can absorb these shocks, keeping your financial plan on track. Identity theft and financial fraud. As our lives become more digital, the risk of identity theft and fraud grows. According to the Federal Trade Commission, over 4.8 million identity theft reports were filed in 2022 alone. Fraud can drain bank accounts, damage credit scores, and cost thousands in recovery efforts. Preventing identity theft requires strong security practices, constant vigilance, and timely action if a breach occurs. Poor financial decisions and scams. Many lose wealth due to poor choices or scams, from paying excessive fees for bad investments to falling for get-rich-quick schemes. Emotional investing, such as panic selling or chasing hype stocks, also causes significant losses. Education is your best defense. Question everything that seems too good to be true, consult trusted sources, and develop a disciplined financial approach. Building your emergency fund, the foundation of wealth protection. An emergency fund is your first and most crucial defense against financial disasters. It acts as a buffer, shielding you from unforeseen expenses and market volatility. How much should you save? Experts typically recommend saving 3 to 6 months worth of essential living expenses. If you have a less stable income, dependence, or higher risk, consider extending this to 6 to 12 months. Calculate your monthly essentials carefully: housing, utilities, groceries, insurance, transportation, debt payments, and other necessary expenses. Where to keep your emergency